Welcome back. You're with us on Bazaar Morning Call, and as we've been telling you, the picture across Asia is largely green. Most markets are holding up quite well. The Japanese market, of course, the Hong Kong markets as well, looking quite okay. So let's quickly pull up the implied open to see what that could translate into for us, given yesterday's big surge. We'll just get the GIFT Nifty and the implied open up as well. There you go, about 42 points higher is the expectation. Now, what about individual stocks? Well, our CNBC-TV18 list of top stocks to watch is ready with the whole team on standby. So let's straight away, go to it. We have Lata joining in to talk about the RBI action yesterday, further measures to boost liquidity. This includes more swaps as well, more open market operations. Let's go across to Lata for more details and the impact. Lata.
Yeah, that's right. 10 billion of buy-sell swaps that they're going to do. And that's on March 24th. And then they're going to buy 1 lakh crore of bonds. Now, we have to remember that the RBI intervened at many times in November, December, January, but did not actually sell the dollars. They did a sell and then did a buy-sell. So that sell is maturing now and they have to deliver the dollars. So some of it they're pushing forward. Already, if you remember, on February 28th, they did one $10 billion buy-sell swap and pushed that by 3 years. Now they're going to do yet another swap, buy-sell swap again, so that the dollars that they have to, sell to the market will have to go after 3 years, another 36 months. So 20 billion is not a problem. That has already been pushed back by 6 months with these steps. But we know from the RBI February bulletin that there is $80 billion of these open positions sitting as of February, and maybe it's a little more now. Now, the remaining dollars, when they come for maturity, the Reserve Bank may actually sell it from their reserves, because at the moment, the rupee seems to have turned the corner, primarily because the dollar appears to have clearly gone back to the pre-Trump days. The Trump trade seems to be over. And so now it'll be easy for Reserve Bank to take those, dollar deliveries. But more importantly, because of this transaction, this 10 billion buy-sell swap, which they have done 2 in a row, the cost of the forward dollar will fall very sharply. It's expected to fall by some 15 basis points from 6.33% to 6.2%. Now, what happens is a corporate that is looking at it, you're able to hedge the dollar so cheaply, they will go for ECBs. The expectation is that that will bridge the capital deficit. A lot of capital outflows have happened by FPIs. That will be bridged. If you keep the forward rates low, Indian corporates will fill it up. That's the expectation. So even exporters, as they see the forward dollar falling, are likely to bring in their dollars from their external export foreign currency account. The other piece that they have done is this 1 lakh crore of bond purchases on 2 days, March 18th and March 24th. Now, there are some repos that are maturing, and there is the big advance tax outflow. So to cover the liquidity deficit during those days, by more durable liquidity, these 1 lakh crore of liquidity is given to the market. The bankers and the NBFCs will be thrilled. Immediately, you will see market rates going down. For instance, the 10-year yield will come down from about 6.73 to 6.68 or thereabouts, at least a 5 basis point fall. Cost of all shorter-term paper will come down. Good times for NBFCs. In a bit, if this liquidity continues, the banks will be able to pass on the deposit cut, which means the cost of their raw material deposits will fall. So very good news for banks and NBFCs.
All right, Lata, thanks a lot for that. The RBI's moves have been something that, has been really been very, very positive. And the new RBI governor, from the word go itself, it appears the greater focus is on growth and focusing on liquidity, which is good news from an economy and the stock market perspective.